Good day, everyone. Today, for our Fund Manager YouTube series, we have Mr. Deepak Jain from Edelweiss. He's the head of retail sales, and he's a FCA, and he has over 17 years of experience in the industry. Prior to this, he was part of DSP Mutual Fund, and also he had a stint with other mutual funds. So, Deepak Jain, welcome to Fund Manager series.
Thank you so much for having me here.
Deepak, this is a question that I normally ask all of my guests. What inspired you to pursue a career in finance and in particular the mutual fund industry? And how has the industry evolved since you first started? So if you can start with that, that'll be great.
Yeah, I mean, I can give very longish answer for both the question.
Feel free to.
But, like everything in life, it's a combination of what you want and what it's in store for you in terms of your destiny. I mean, I'm a big believer of fate. So if I have time, I can just briefly narrate the story, how I got into the mutual fund industry. I was pursuing my CA in 2003, and I had appeared for my final exam, and I was approached by an unknown person to perhaps have a look at the insurance industry, join as an agent. And financial services, while studying for CA, drew my attention. I really like the subject, especially both on insurance as well as investment side. So I just found it as an opportunity to join insurance. So I actually completed my RDA license and worked for HDFC Standard Life for a couple of months. Not many know about it. I thought that I will bring about a revolution in India and sell term insurance plans, so on and so forth. But all I succeeded was selling another 20-25 policies on the endowment side, which I wasn't necessarily doing a great job at because my peers at others, I mean, like LIC agents, etc., were doing a great job. So at that point in time, I was kind of, not sure what I will do. And somebody approached me that, why don't you join mutual fund? Her husband is looking out for new recruits in terms of project training. So I said, that's a great idea. I mean, investment is something that really drew my attention while I was studying for CA. So I joined there as an intern in 2003. It's been 20 years now, almost 20 years. I didn't know about mutual fund, but hey, I mean, those were the real, interesting 7 months that I ever had in my life. I really learned a lot. Wherever I have come to or whatever I have become, it's all because of those 7 months. Really learned a lot. I joined Standard Chartered Mutual Fund. So IDFC Mutual Fund was known as Standard Chartered Mutual Fund in those days. So I spent there about 6-7 months, learned a lot about the industry. And then, yes, once I completed my CA, I moved ahead and joined ICICI Bank, again on the investment side for a couple of years. And then I spent 12 years with DSP. And for last 5 years, I've been with Edelweiss. Earlier started as retail head of sales, then institutional, and then, the reward of good work is more work.
Excellent. So you are the right person. If I were to ask, we are at an inflection point with more people coming into the formal economy, the jam trinity, working its magic. So in your opinion, what are still some of the big challenges that the mutual fund industry is facing today in terms of how it can leapfrog the AUM growth? So you're the right person, because you have a field side view as the head of sales. So what, in your opinion, is some of the challenges that can you guys are trying to overcome?
So the challenges are many. Today also, if you ask many customers, the common question would be, should I invest in mutual fund or an SIP? So people still think SIP has been so popularized that it's a different product and not a way of investing into mutual fund, or for that matter, any other thing. So we have reached a long way, to be honest. When I joined in 2003, the AUM was less than 1 lakh crore. Today we are at 40 lakh crore, and I'm sure in 5-6 years time will be 100 lakh crore. The AUM is not necessarily a challenge in terms of growing from here. What may be a challenge, and I think it's true for the entire banking and financial services system, the penetration story, we will have multiple kinds of India. So you will have an evolved India, somebody who's been investing for last decade or two, would be at a different stage of understanding, and somebody who just come into the banking system in last 3, 4, 5 years, they will take their own due time to get into basic savings, then getting into elevated level of understanding, and then perhaps coming to mutual fund, and then making their own abilities or own understanding about how to invest, where to invest, how not to invest, so on and so forth. So my, in short, I would like to believe that whatever we are doing in terms of growth, will be far, far behind in terms of penetration, because there are many, parts of India which are simultaneously growing at a different pace. So the challenges would be to bring people into the system. The challenges will be to understand the volatility aspect of investing into mutual fund. By volatility, I just don't mean market related movement. It's also the fact that everything is priced to yesterday.
Right.
I mean, for example, even if you invest in a liquid fund, there is a change in the net asset value, right? But when you invest in a bank deposit, you know that if somebody has promised you 7%, if it's written on your bank certificate as 7%, it is 7%. It is not 695 or 705. So those are the things that we need to teach people, and people perhaps will, with time, would actually get hang of it.
Okay. As a follow-up question, if you look at the penetration, market penetration, if we set aside the AUM growth, which you said is not a problem, but if you look at the percentage of people who have an active, a mutual fund folio outside of the T plus 30 cities, right? T plus 30 cities. What sort of efforts are needed in terms of bringing these people from traditional saving instruments like a gold or real estate or any other thing? So, is the industry focused on penetrating the T plus 30 cities, and what are your views on that?
No, so industry has gone beyond top 30 cities. Today, a large portion of industry AUM is coming from beyond 30. It may not necessarily be to our liking where we would have wanted it to be, but it has grown from, where it all started a decade ago, or decade and a half, almost a decade ago. Today, investors come from cities that you may not even heard of. You would perhaps not even have a bus service to that city or a town, but you may find a mutual fund investor. Just to give you some sense, Edelweiss Asset Management have physical presence only in 25 locations, but more than 1/3 of our AUM comes from beyond 30 cities, investor base, not AUM. So it need not necessarily be a direct effort. It could be a combination of efforts taken by the industry, and the investor awareness that comes about when you reach a certain level of income, when you reach a certain level of education in general. The demand for products, whether it is non-financial and financial, it takes its own shape. So just to give you some sense, in last 3-4 years, we have doubled our investor count. So we were close to 2 crores of unique investors. We are now almost 3.7 crores unique investors. It may still look like a very, very small number, given the fact that we are a country of 140 crores. When you talk to consumer companies, they think India is a 50 crore consumer market from a pure play consumption product. But you also need to understand that entire the banking system inclusion only started in last 5, 6, 7 years, where a large population have just come into the banking system. And for you to be able to invest in mutual fund, I think there needs to be a basic comfort with the entire banking system. And I think with due course of time, with the effort that has been put by collectively by the industry in terms of IAPs, this mutual fund Sahi Hai has been a big game change for everybody. The fact that SIP is being construed as a product and people are taking it to it like fish to water, I think that's really good. What we need to do is continue doing it, not necessarily get perturbed by short-term movements of either markets or change in flows. Those things will happen. with every bull and bear market, you see some investors coming and some investors going. But the point is that if your economy is doing well, if your products are good for the customers, they are doing what they're supposed to do, then I really don't think there'll be a challenge of growth in a country like us.
Excellent. Again, add-on question: How does Edelweiss AMC approach the task of educating the investors about you said mutual fund sahi hai, which is an industry-wide thanks to cricketers we all see that. So in terms of educating the investors or awareness, again from the years of experience you have got, how have the shift been? Are today's investors more aware of the benefits, or do you have to again start from the basics? So you said there is still confusion about MF and SIP. So what kind of basic steps are taken by the AMC or industry in general?
So in industry in general have been doing a very good job. All asset management companies are required to keep a certain amount of money aside for investor awareness program. Half of it is which is given to AMFI, which uses that to come up with its programs like a mutual funds sahi hai, and other advertisements that it has been doing. All asset management companies conduct their own IAPs. They go to investor societies, investor communities, or communities at large, doing small events and educating people about basics. But the great work that has happened, I believe, is happened in the digital domain, where a lot of us put out quality videos, whether it's a 2-minute video or whether it's a longer capsule where you can understand details about the nuances involved in investing in mutual fund. So I worked with previously with DSP. DSP did a fantastic job. Edelweiss is doing a fantastic job on educating people digitally. We have a dedicated learning and development department headed by Vikram Masan. We do encourage people to look at our videos and join our live sessions. But if you look at it individually, it may not be enough, but collectively it is making a great impact. I have seen some of the players, the new digital players, making a lot of impact via their digital sessions, whether it is Grow, Zerodha, Paytm, ET Money, so on and so forth. I've seen a lot of MFDs do a great job in being the last mile connect to somebody who may not necessarily be very exposed to the digital medium and would still need a person sitting across the table explaining the product and giving that comfort. I believe while you deal with money, that comfort is very, very important, that koi to hai jo dekh lega. Somebody will look after my money and I need not necessarily be bothered about it. So education is one thing. You may not necessarily get all the investors completely educated about all the nuances of the product, but the basics of investing, the need for investing, being aware about your goals, whether there are short-term goals, and I believe retirement in particular has to be really well understood, and it may not necessarily happen in my working life also, because sometimes we don't understand the problems that are far off. If the problem is 25 years away, we think that it's not there. But hey, I mean, I've already completed 20 years. And I thought it's a story of yesterday. So time really flies by. So we will have to continue making those efforts collectively for people to realize that your money you may outlive your money. It may not necessarily be enough for it to be taken care of your expenses. People are having shorter careers and longer lives. So I think collectively, this to my mind is the biggest challenge.
Interesting. So a 20-year-old self, if I were to ask you, or probably most of people who watch these videos are youngsters. So what kind of advice would you give to new investors, or going back in time when you were in your 20s, what would you have done differently? So for the current generation in their early 20s, what kind of advice would you give them when it comes to investing?
Great question. I mean, for investors, I would urge not to make my mistakes. I did make some mistakes, took on liabilities too early in my life in terms of home loans, etc., and not necessarily giving it the right balance of savings and providing for your shelter. I think one needs to really start saving early for retirement. And it has to be taught, in my view, perhaps in school, colleges, because by the time you understand about the importance of your goals, it's already 10 years that has passed by. So I would ask people to start investing as early as possible. Also, at the same time, I mean, shelter may be a very important objective, but increasingly, especially in the urban centers with the third generation of people coming to work, a basic need like shelter may not necessarily be the a fundamental driving force behind your saving. So that could also come as a positive surprise. But I would urge people to look at longer term goals and start investing as early as possible, and not let someone tell you in your mid 30s or 40s that you are late.
Excellent. Sort of segueing to Edelweiss. Edelweiss AMC, at least in our circles, the finance industry circle, is known for its innovation, to come out with unique products. So for those of our audience who have not too sure, it would be nice to hear about what kind of innovation has Edelweiss brought in to the industry.
So what we have done is that we have got some product innovation and some process innovation. The way we think about new products is something that can perhaps give you some insights on what exactly goes in our mind. So, whenever somebody comes to us, or our product team gets an idea that we need to discuss about, etc., what we think about is that will it solve somebody's problem? B, will it be of scale? Will it be of a problem? Am I solving 50 people's problem, or will I be able to solve a lot more? I mean millions. Okay. Third, do we have necessary capability to deliver on what we are trying to deliver? If we don't have capability, demonstrable capability, then perhaps let somebody else do it. Fourth, is it also very simple to understand? If it's very complicated and it's rocket science and you have to explain it in the, like, for example, I always say fixed income, the reason people don't come is because we scare them away by using terms like duration and convection and, MTM and interest rate sensitivity and whatnot.
Yeah.
So it's just a simple thing of ब्याज, right? पैसा मुझे मिलेगा कि नहीं मिलेगा और कितना मिलेगा कब मिलेगा, right? If we could answer those three simple things, we could have really solved the problem. So this is what goes in our approach for launching a product, for launching a service. If it's complicated, we don't want to do it. Perhaps in the past we may have done it, and I'm not saying that we were, really perfect from day one. But the evolving thought process, ever since Radhika took over, we also joined in. The idea has been to be simple and problem solving when it comes to products. Can I sell a product to my mother-in-law, my mom, a 67-year-old mom who hasn't necessarily gone to college and understand the nuances of finance, etc., but she has basic understanding of money. She knows what money is all about. We have come through a struggle. So if I can explain to her and she buys the product, it's a good product. If I can't, then I need to go back to the drawing board and work on my pitch or the product itself.
Excellent. So I was just, go ahead.
Yeah. So with that in mind, we launched our target maturity funds, which solved for a simple problem like how much will you get? Is your money safe? And when will you get? All three things get answered by this product. Similarly, we have done some other exercises with the products that we are in the process of launching. So I talk about retirement. I think retirement is a big segment. People perhaps don't have the wherewithal to be able to design a product which caters to the need of their entire life, entire journey of this retirement. Let's say from starting phase of accumulating, then rebalancing, and then distributing the benefits of the savings that you may accrue at your end of the retirement. So the product has to be thought from a 40, 50, 100 years perspective. So we are thinking in those terms, and perhaps we'll come out with one soon.
Excellent, excellent. So I recently saw this stat, comparing the AUM growth across all the mutual fund houses, and you guys have probably 300% plus AUM growth for a mutual fund house that doesn't have a big bank name or something to piggyback on. So definitely, that's commendable. Any thoughts on what is it that you guys have as a secret sauce? Any thoughts from you?
No, so as I said, we have tried to keep things simple. We have tried to solve a problem, and that has given a scale much beyond our expectations. So, for example, a balanced advantage fund. What should it do? It should be an equity-like product in that sense, because people want to make higher returns, but they don't like the volatility. They don't like the drawdowns. So if we can make that entire journey a little smoother, so by following a model which is completely different than what the industry has been following, we have been able to provide a higher than most in terms of returns, but a volatility which is perhaps understandable. So just to give you some sense, this is a product which tries to give you Nifty-like returns with half the volatility. I mean, I'm not saying it will be able to deliver exactly, but that's the objective. So you can simplify that market jaisa, but volatile.
Excellent. Nice.
So it's understandable. Ha, yaar, mere ko zyada volatile nahi samajh mein aata. But yeah, I don't want to miss out on the entire returns by putting 2/3 of the money in, let's say, low earning assets. Many investors don't want it. Some may want it. So the kind of investors that we cater to, we realize that are coming for that extra kick that they can generate without compromising or without being exposed to volatility. Similarly, same thing we did in target maturity. Simple product, and the scale is there for all of us to see. 3 years ago, the entire industry was zero. Today, the industry is 1.5 lakh crore. We are 50% market shareholders.
Excellent. So you are the industry builders. If I were to ask you to sort of crystal ball glaze, 5 years down the line, 10 years down the line, okay, what do you think, or probably is your wish list and that you'd like to see in terms of innovation, tech trends, or opportunities in the mutual fund industry space in India? Sort of like a wish list or future
wish list, or let's say my hope. I believe more investors join in. 3.5 crore is simply not enough. I believe there'll be a time within a decade, maybe there'll be more than 15-20 crore mutual fund investors, maybe more than that. This number can easily go up to 30-35 crores if we really do grow as per our potential. More financial inclusion will need for better demand from investors of products of financial services. And I think mutual fund industry is doing a great job collectively in managing people's money. We are a very transparent industry. Just imagine if you think about getting your money at 2:30 in between T+1 to T+3 days, you get it. Tell me which other industry gives you that comfort and convenience. You want to look at your portfolio, you can go to the website and you can look at your portfolio. You want your returns calculated in various manner. There are many MFDs, many advisors who will let you know. There are choices, 40 categories of choices that you are that's available to you, and everything is transparent. Everything is available on the website, collectively on AMFI's website. Can you find that in any other industry, that collectively on one website you get all the information? No. The answer is simply no. The industry has done fantastic job. The product is good. So something which is good, why won't it attract investor attention? Just to give you some perspective, in 2005, a mutual fund house launched a product called Super SIP, which was SIP blended with insurance. And we thought it's a great innovation. It was. Many others follow. So we needed insurance as a crutch to be able to sell SIP. Today, many insurance companies are trying to use word SIP, etc. to sell their product. And we have surpassed 40 lakh crores of AUM, which is the threshold of insurance AUM. So in 15 years time, in 17 years time, and in an industry which was nowhere has grown so fast. So I believe that, my hope is that more investors will look at this wonderful thing that is called mutual fund, which provides a lot of options to investors for their problems and for their goals. That will be the biggest wish list.
Okay, if I were to ask you, what do you see as the biggest risks that the mutual fund industry or investors are facing? What would it be? Just the opposite of.
So not understanding the risk would be the biggest risk, in my opinion. So it will not be hunky-dory. People need to understand that every return that will come with its own share of risk. So risk is not just about losing your money. It's also about uncertainty that can be there. So if you don't understand the product well and only look at, like, let's say 1 year returns, 2 year returns, and start investing, and then 2 years later you just are beaten down by reality, that the returns are going to reflect the economy that is there. So it's really important for people to understand the risk associated with any investment, and more so with mutual funds. So if people don't do that, that will be the biggest risk for this industry, because then they will make choices which will be emotional and not necessarily rational.
Got it. Excellent. Coming back to Deepak Jain, the person. So when you're not looking at your mutual fund industry verticals and your day job, what are your hobbies, or how do you chill? So if we can know a little bit more about Deepak Jain, the person.
Yeah, so I'm greatly into following sports. So I've been following tennis for last almost 29 years. I started watching Wimbledon in 1992, the famous Ivanovic Agassi final.
Nice.
I started watching Formula One in 98 because of Michael Schumacher.
Great.
I still get some time to watch some of these races, though my favorite race car, Ferrari, hasn't won anything in last 15 years. I hope this changes this time around. I do watch a lot of movies whenever I get an opportunity. There was a time when I used to watch a movie a day, but that necessarily not happened in last many years. Yes, and I used to, and I say used to remotely, because I don't get my concentration to read a book, but I used to read many books earlier. The one book that really changed the way I think, the way I think about life in general, was Atlas Shrugged by Ayn Rand. I read it 25 years ago.
Wow.
And it is still with me. It is still there with me in the bookshelf behind. So yeah, I read a bit. I used to read a bit. I follow sports in general, and a movie buff.
Excellent. So that sort of naturally leads me to the next question. I ask all my guests to recommend a couple of books, and I'm actually delighted to see someone who has who has read Ayn Rand at such a young age. Even now, probably it takes a lot of effort for me to figure out what the book is. So I can see Sapiens. I can see a lot of that's a well-stocked book collection. So excellent. Deepak, if I were to ask you to pick 3 of your favorite books as a recommendation for my listeners, what would it be?
It won't be recommendation, because I think a book is also a reflection of your personality and the context in which you are reading the book. Sapiens, for example, is a great book if you really want to understand human evolution. It has an impact. If you want to understand competence and focus on quality, focus on people's relationship, then Ayn Rand will give you a certain perspective from a certain worldview. Right? If you are on the other end of that worldview, you may not necessarily like it. I was a great fan of John Grisham, for example. The Firm was one of the first few books that I read. Devil in Pinstripes is something that I have read. So I don't necessarily have a genre, so to say. So I don't want to recommend, but yeah, Sapiens would be a good start. I would say Fountainhead would still make a lot of sense to people. And an autobiography of a yogi would be something which really would be require a lot of time, a lot of patience, but it will be really meaningful. It will be really worth it.
Excellent. I was trying to turn my head and figure out some of the books that you have. So great set of recommendations for those listeners. Ayn Rand, all his books, excellent picks. Sapiens. Okay, Deepak, let me push you a little bit from finance, from a finance vertical. At least give us one recommendation.
So I don't read. I have not read a newspaper in last 15 years. I mean,
Excellent.
business newspaper.
Okay.
I don't read too much of finance. I believe there is too much of information.
Right.
A core logic is there. You just need to go by your understanding, basic understanding, and then we have in it us. I mean, you don't necessarily have to go by a finance book to read, but I think people should just stick to whatever they like, and not necessarily. I can recommend anything. It's easy, but that would again be similar to saying where would the market go.
Correct.
I mean, you ask a fund manager and they will say that it will be 15% in 3 years and 5 years. Nobody knows. So
Right.
I purposely don't want to recommend anything. It's something that is very personal. That's why there are so many books, and you can't necessarily you won't even touch even 0.1% of the books that are there available in the world. So
True.
find your own journey as far as reading is concerned.
True. Let me put it this way. Imagine a few years or decades down the line, you are happily retired. You are probably in Goa or some exotic location. You have 3 books in your hand, from your wish list that you have never been able to because of your busy schedule. What would those 3 books be?
One would definitely be Mahabharata.
Excellent.
The other would be Ayn Rand, AlphaStreet, to be honest.
Okay.
And the third, let me just think about it.
Something that you haven't read.
Something I've just picked up. Thinking in Bets.
Thinking in Bets. Okay.
Yeah. So this is a book about making choices when you don't have complete information. A book about investing, but not by somebody who is into investment, but by a former poker player. So interesting. Let's see how many like it.
Excellent. That's going to be my, that book is going to my wish list today as soon as we are done with it. Deepak, it's been a pleasure catching up with you. It's been a pleasure to get to know you in person, and also the insights that you gave us from the mutual fund industry. Looking forward to speaking with you again in our future series.
Thank you so much.
Thanks for your time.
Thank you. Really appreciate your time. Thank you.